You are watching the TheoTrade Weekend Update. This is Don Kaufman. It's August 18th, 2018. Let's get right to it. What you're looking at on your screen right here, right now, happens to be a number of ETF products that are representative of major sectors inside of the S&P 500. Now, I do not have every single sector represented. Right on top over here, we'll start with the spiders. We'll work our way down, of course, to the financials. Then we go to XLK, which of course is the technology ETF. XLV, that's healthcare. XLE, okay, of course, is energy. Then we get to the XRT, which happens to be a retail ETF, the XLY, which is actually consumer discretionary, the XLU, which is utilities. You kind of think of that as a defensive sector. And then, of course, last but not least, the XLP, which is consumer staples. So I've got a number of consumer discretionary, consumer staples, and overall like retail ETF on here. What have I really excluded? Well, I didn't really put in materials. I didn't put in like real estate in here, but I really wanted to give you kind of a good kind of cross section of some of the major sectors that kind of, comprise the S&P 500. The reason we're going to go through this is in a moment here, I'm going to pull up a comparison chart because there's some excellent trade opportunities, I believe, in the midst of looking at these sectors on a comparison chart. But there's also a much bigger story kind of in here and really in play in just the last 2 weeks. So allow me to start the conversation here on this weekend's update, not reviewing markets, not going into detail about the expected move in the SPX, but again, showing you just a little homework over here, and anybody can build this particular watch list and anybody can build the comparison chart that I'm about to show you and kind of visualize this. The question that kind of looms, and the reason that I'm bringing this up to begin with, is if you just looked at this in a cross section right now, okay, and compared each of these major sectors over the last year, not the year to date, but just over the last year, what would you tell me would be the hottest sector inside of the S&P 500? Again, of the sectors that we've brought up, what's the hottest sector in the S&P 500, okay, year over year? So literally in the last year, what's the hottest sector on a percentage basis? Because this one, I have tendency to just stop what I'm doing once in a while, and I go back to, I wouldn't call it like the fundamentals, but I'll go back and I love to look at things never autonomously, always in comparison to one another, because you have to have some baseline. And in this particular instance, that baseline is going to be the spiders. So you've had a minute to kind of think about it. Well, now let's go look at the chart. So what you're looking at on the chart, well, it's a lot to look at. First of all, it's not spaghetti. It's just a 1 year daily. And it's a comparison chart. And everything, in comparison is done on a percentage basis. So effectively what you're looking at is well, this watch list kind of turned into a chart. So what was it? Okay, well, let's actually right click there right up top over here. This is your number one performer. It's the XRT. Now, I looked at this and, I actually broke it down a couple of times. Like, wait a second. XRT. Let's go back for a second. Just back for a second over here to the list. You're telling me that retail, because a year ago they were talking about it's the retail apocalypse. Nothing was staying in business. Companies are going under day in and day out. But hey, that's all right, because right now, over the last year, it's our best performing area. All right. Now, you may have thought to yourself, no way, it's got to be the XLK. That's what I thought. Had to be the XLK, right? Technology. It's been tech this, tech that, the monsters of tech. Come on, you can't beat, the Facebooks out there, right? Except Facebook fell flat on its face. Definitely pun intended there. But again, it's fairly shocking. And there's going to be some trade ideas in here in just a moment. By the way, for those of you that do not know the XRT, if you do not know this product, the XRT, well, let me actually take you to a slide and show you a little bit about it. This is the top 10 holdings First of all, inside of the top 10 holdings, one of the first things I look at everything again on a percentage basis. It's a nice kind of cross section, a smattering, if you will, in the retail world. Most of the time when I look at these sector ETFs, they're like very disproportionate, 20% here, 10% there. But this one, again, it's kind of a nice cross section, except that the number one product over here just got bought out. That's gone. So it was just bought out by a larger like supermarket over there. So super value is toast, okay, and is going to, again, they're going to replace that, in terms of the top 10 holdings. But it was bought out, and I think the stock was up about 60% after they bought it out, which actually gave the XRT a nice bump in recent trade. Anyway, it's got Kroger, it's got some Rite Aid, a little bit of Carvana, Rent-A-Center, and on and on. But that's really what kind of, again, comprises. It's important once in a while to know what kind of comprises that. So where am I really going with this? Okay, first of all, one of the first trades that I want to bring to your attention is at this point in time, okay, we can look at this again over 1 year, but I think it's also fair to change the time frame from time to time. Why do I want to change the time frame? To get a better cross section to this, again, on a multitude of different time frames, I think is imperative to understand it even better. And you can see the XRT year to date. So I just switched it to year to date. You see the XRT, it's still, okay, smoking out there. In fact, when I say it's smoking, I mean over the last, year to date, it's up about 11%. And that's actually, looking at, again, in contrast to the XLK, which is up 13%. People, they're just neck and neck. And again, there was a period of time here just, again, days ago where the XRT was literally tied pretty much for first on a year-to-date basis. So, again, this particular product, right, at this point in time, looks a little bit like an overcooked turkey. So there's two different positions that I'm going to look for inside of the XRT. Now, I'm by no means done, and I'm not just going to go into a position of the XRT. There's much more going on here than kind of meets the eye. So the XRT, because of the overperformance, I am going to look to put on a variety of short positions. I don't suggest that you do all of them. You kind of have to select, okay? First, for those of you that don't want to tie up a lot of capital, or you don't want to be tied up for a longer period of time, I'm going to select, okay, what's called an in-out spread, which I'll show you here momentarily. However, I think something much larger is in play right now, and I like to do what I call kind of a duration short. And what that effectively means is over time, I believe that this product is going to slowly start to drift lower. Okay? Maybe a little shock and awe. Nevertheless, if I believe the product is going to drift lower, I want to create a short position. But I don't necessarily want to bring the capital to the table to create a short position in a $51 product. Now, again, I'm going to show you the individual trades here momentarily, and I think it's important to obviously to get into the structure of the trade. Direction is very secondary. To me, the structure of the trade, it's everything. Now, for those of you that have followed TheoTrade for quite some time, these have been kind of some of my bread and butter trades is, betting against a couple stocks. We've bet against Caterpillar, right? We've bet against Morgan Stanley. I mean, come on, we can go on here all day long of individual products that we've done very effective on and been effective on in taking short positions. We've been short the emerging markets on and off throughout the course of the year. As we said, Caterpillar, I do maintain a position in Boeing. That one's not going nearly as well. I'm maintaining a position inside of Intel right now. But again, for this particular position, we are going into the XRT, and we're going to create a short. So back over to it. I'm now going to bring up the XRT, and I'm going to show you one of two different short positions. The first one, you can see I've got a number of positions. Obviously, I've been to work in the XRT now for quite some time. One of the first positions is just going to be what I call kind of a straightforward in-out spread. Again, so what is this in-out spread designed to do? It's just a purist position. Listen, the underlying is trading right at around 51.20. I'm buying a $2 wide spread. What's the most you can make in a $2 wide spread? Well, $2. What do you pay up front? In this case, about 87 cents. Granted, the market's closed, but it's about 87 cents, right? But I'm not trying to make the full $2. Okay, I'm trying to make in the neighborhood of about 55%, okay, on the 87 cents that I have at risk. In this particular circumstance, listen, you're not hitting a home run, but it's a nice defined risk trade. And if the trade starts to go against me, so be it. Like, I'm not going to panic over here over 87 cents of risk. And there's no reason to have to panic. There's no stop order. You can't lose more than 87 cents, right? So that's the in-out spread. And again, it's one of the quintessential trades that I use when I want to get directional. Now, here's the other position. Now, again, I suggest it's either or. Now, have I done both? I have done both. Why have I done both? Because, I'm sitting here saying like, hey, if you want skin in the game, these are a couple of trade ideas. And I'm telling you right now, I don't just present a trade idea. If I don't have skin in the game, meaning if I don't execute the trade, then I'm not talking about it. So I have an in-out spread, but I also went out and I just used a duration put. You want to know how easy it is to buy a duration put? You just buy a put. Don't you dare pay what they're asking. You got to carve that market right up the middle. Okay, this is one where initially it's on for 63 days, but I fully intend to roll this thing out in time and roll it out in time. And when I say it's what we call a duration, okay, what does duration mean to you? It means to you more, okay, than 3 months of time. So I'm going to be sustaining this position for a duration of more than 3 months. Immediately people go back and they go, but look, it's only a 63-day, to expiration. Yes, I can see that. But as I said, I'm going to be rolling that thing further out in time. All right. And, again, we have classes on all of this stuff at TheoTrade. And it's important that, even if you've been through some of the classes, if you're not totally up to speed on rolling the duration put, that's something that's worth going into the class, and looking the criteria. Just download the slide deck, look at the criteria, make sure you know when to roll. Okay, when to roll, how to roll, what the delta of the roll should be. Same thing goes for the in-out spread. I talked about getting out with a 55%, return on here. It'll show you actually how to do that and how to allocate capital on that particular trade. Now, okay, I just mentioned again the XRT for just a few moments. Okay, and a few trades in the XRT. But back to our kind of spaghetti happy hour over here. So we're looking now at this 1 year, and I'm seeing that the XRT is outperforming. So I decided, as I said, to look at multiple time frames. Now, I opened up a 3-year. So I opened up a 3-year. When I opened up a 3-year, I right-clicked up here, and I go, oh, yeah, that makes sense. This is the XLK, right? That's technology, okay? What's really interesting, though, and probably the most interesting, look at the very bottom of this barrel. You see the bottom of the barrel really close to it? Right down there where my mouse is. And I want to just kind of highlight this guy right here, right? That particular underlying, yeah, that's the XRT. So this does not bode well for the marketplace as a whole. This, again, aside from the bearish position I just took in the XRT, okay, this does not bode well for the marketplace. Why? The end of a marketplace moving one direction, right, is when they start rotating out of what they could not stop buying technology. I gotta have it. I gotta want to have it. Momentum stocks in the last 2 weeks are out of favor. Okay, momentum. What is it? It's been the monsters of tech. It's been your Apple. Okay. It's been your Google, but I'm going to show you this. It's been basically not even so much the XLK. It's been the Qs. It's been the Nasdaq as a whole over the last 2 weeks has actually fallen a little bit. And at the same time, they're buying crap. And I hate to be so literal with it, but come on, retail, right? Retail, nobody would touch retail with a 10-foot pole, okay, until what? The last couple of weeks when all of a sudden it's the greatest thing since sliced bread. You take a look. All right. They're buying it again like it's going out of style. It goes from the lagger in the pack to the hottest thing out there. This is where you have to be concerned about the entire marketplace. You've got to be concerned when traders start rotating capital from some of the hottest sectors and start buying stuff that just simply wasn't performing. Because what they're doing is they're actually moving from what's supposedly a growth company. Okay. I don't really agree necessarily with the idea it's a growth company. I think it's just momentum. They're moving from momentum into back to actually value. And when you really want to clean this up and look at it, when I say back to value, you don't have to look too far. Look at stuff like the XLU. All of a sudden, utilities. Utilities. Oh, yeah, that's the place to be. Really? Because it pays what? A 3% dividend, right? So utilities, what are they doing? They're buying them. Take a look at the XRT. What are they doing? They're buying it. Okay? All of a sudden, look at the Qs. Look at the Qs in just the last 2 weeks. Okay? What are they doing? It's actually starting to drift a little bit lower. Now this, again, very, very interesting. At the same time, all of a sudden capital has been rotating into financials. You do realize that financials on a year-to-date percentage are massively unchanged. There is all of a sudden, okay, a very large shift of capital away from what have been some of the hottest products out there. Netflix can't find a footing. You do realize, again, this was up 110% on a year-to-date basis. Okay, those returns have almost been clipped in half at this point. Obviously, Facebook had a little, bit of a face plant. It's now down, 4%. Google is starting to actually give up big returns. So start looking at some individual products, again, that have been the hottest thing. Amazon, hey, listen, this thing is still a stone's throw off all-time high, as happens to be the S&P 500. Let's not forget that in the backdrop of all of this, even though I'm showing you that all of a sudden, like, retail is great, retail is hot, it's capital rotating, right, from tech into areas like retail that are actually boosting the marketplace as well. The question is, again, when does the music stop overall? So it's a lot to kind of think about. And by the way, if you're interested in this, here happens to be the XRT. This is the retail ETF. This is the technology kind of ETF. Obviously, Apple reigns large in here, okay, as does Microsoft, Facebook, Google. Okay, then it drops down to companies like Intel that have been under some pressure lately. Last but not least, the XLY. Talk about, again, how some of these ETFs are a little bit flawed. Again, Amazon is the equivalency of 22% of that particular ETF. And I've showed that before, but I've never really discussed the XRT in such extent. So, again, with a few minutes left, let me go to some different areas. So we threw up a trade in there, but let's go to a couple of different areas. As I like to do on each and every kind of weekend update, I like to discuss a little bit about expected move. And in this particular circumstance, with the expected move in this week that we just passed through happened to be that expected move, okay, was right around $42. That's $42 higher or $42 lower. This next week, and that's the coming week. And again, this is stuff that, you should get comfortable. Take a look at the trade tab. Go look at the trade tab. Go look, the 7 days out. Check the expiration cycle, right? It's August 24th. It's right around $34 and change. So you bring it back over to the chart. And again, to compare and contrast, we just came out of, again, a $42 expected move. Now we're going to move into a $34 expected move. So volatility did what? It happened to contract. Nevertheless, one of the things that we are seeing in here, even though volatility contracted a little bit week over week, the historical volatility, okay, over the last 5 days is on the rise. Again, historical volatility, which is the annualized standard deviation of the past stock price movement. Basically what it means is the market's starting to move more, but the options market is contracting volatility. It's very, very peculiar, okay, in effect to see this. Again, the big overwhelming theme over here, though, is all of a sudden we're seeing rotations of capital. I mean, again, Walmart, people, they had stellar numbers 2 days ago. Nevertheless, okay, like Walmart, like when this becomes your last hope, that's when you have to get a little bit nervous about the overall marketplace. We're rotating now into underlyings that no one wanted to touch just a short time ago. And again, we look at this kind of stuff as, hey, Could it be, the beginning of the end? And the answer is yeah, possibly. So with that, the expected move contracts, but we know that the markets are moving a little bit more. The other thing, and I'll leave you with kind of a fun trade on the way out over here. And that kind of fun trade happens to be inside of Tesla. So Tesla, this thing has been worse than a soap opera the last couple of days. So Elon Musk did his little conversation with the New York Times. If you missed that article, good, because it was pretty horrific. There was nothing in there other than Elon Musk apparently sobbing on the phone and working long hours. I get it. I don't feel bad for him, but I get it. However, the thing that I like the most in this is, okay, there may still be a deal on the table. Is there a deal at 420? Not entirely sure. Okay. However, I was actually willing to take a little bit of a bet on this because I find it kind of amusing. Like the options market, I'll always tell you this. The options market doesn't really lie. All right. When I say it doesn't lie, the options market is giving you a probability. It's giving you like a pulse, okay, of what's really going on. And right now, if you look all the way out to November options, 91 days from now. So if there was going to be a deal, come on, we'd know it. And if a deal was announced, okay, if a deal was announced and they said, listen, Silver Lake comes out and they say, we're going to take this company private and we're going to take them private right at 420. Okay. The stock would probably trade immediately to like 405 to 410. Why wouldn't it go right? Okay. Why wouldn't it go right to 420? Because there's some risk in there still of the deal not necessarily closing. Nevertheless, the marketplace is only giving it about an 8% probability of that occurring in the next 91 days. So let's put it mildly that they're just betting against Elon Musk in this particular circumstance. Now, there's no criteria specifically for this, but you want a cheap out of the money trade, that could be a home run. If you really think the deal is going to happen, buy a call spread. Buy a 405, 410 call spread. Why? Well, for the most part, if the deal happens, this is a $5 wide spread. You could buy it for 50 cents. Unfortunately, I bought this spread yesterday. I paid almost $1 for the spread, but it's a $5 wide spread that could be worth as much as $5. You paid 50 cents for. But you have to realize, again, it's a very much a long shot trade on what is undoubtedly going to be a continued soap opera in the days to come. With that, I want to thank everybody for joining us here on this weekend's update. Hopefully, I've given you a little food for thought over the weekend, but from time to time, step back from looking at an individual chart. Run a comparison. Check sectors against sectors. I think you'll be quite surprised. Have a great weekend, everybody. Bye-bye.